Chris Frostad, how are you, sir?
Very good, thank you, Matt, and a happy New Year. It's been a little while.
Yeah, we can
Chat.
just say that. We haven't spoken, so we can say that. I wonder
Hmm.
if that would work if we didn't speak till June. Probably
Oh
not.
well, happy Easter.
Thank you. Thank you.
however,
Hey,
however long
so
you want to put this in the can. Yeah.
well, yeah. Like let's talk a little bit about last year. Did it pan out as expected? Do you think in the uranium space?
I think everybody was surprised that the spot price languished so much at the end.
Mhm.
And again, there's a lot of seasonality to that. They're watching the spot, which isn't necessarily the best place to keep track of things. A lot of there was some liquidation going on with some of the holders of uranium, but I think and again, nobody. It was mainly no buying. There was no volume near the end of the year, and I like to believe that that's because a lot of that buying is now moved onto they're spending their time with the contracting and putting their focus there. So we certainly saw contract prices come up, in the last quarter, and that's a good thing.
Yeah, and I think there's a little. I love this space for all its what could be's and should be's and might be's. No one knows, but but it's talk of maybe some of the physical guys dumping product into market as well. With that, do you think that was the case? Do you think that would have had an
A little
effect?
bit. I think a little bit. There was, but again, there was so little volume. So to the extent that some of the physical guys were kind of getting some cash back in the bank, yeah, it's going to have. Again, you look at the size of the market, and it's going to be volatile. It's going to be bandied about with really not a whole lot of dollars. And that's what's going to happen. And then we saw certainly we saw the equities kind of drifting off as well near the end of the year. But again, there's a lot of seasonality around all of this. It's tax loss selling. It's a variety of things. It's that this we've been talking about this way too long. But we did see a bit of a bounce back in the new year, which we generally see as well. And
Yeah.
and so we'll see how this quarter works itself out.
Well, I think it's going to be interesting looking at the kind of energy mix. I think I put something on Twitter yesterday about the U.S. utilities, which seem to be the kind of key driver of this. I don't think maybe people disagree with that, where utilities are saying, well, we've kind of got the easy choices now. We got obviously Trump coming in and drill, 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 and is that going to manifest itself? You've got the ease of, and probably reliance on natural gas currently still for energy as part of that mix. And while we in the uranium space, and while but by association, nuclear get our act together, they've got some easy short and medium term choices which they can make. And I'm not sure what that mix is going to look like in the next year, 2 years, or 5 years. In fact, I put a chart up there just to sort of show, how it was working. I mean, coal's obviously been hit hard, but quite frankly, natural gas and renewables are flying, and we're flatlining. Well, I say we, uranium nuclear is flatline, continues to flatline. Do you see? Obviously, we talk week after week about the kind of key drivers, the infrastructure
Yeah,
build,
but
etc.
it's flatlining in a good place. It's flatlining in a healthy place. I mean, I'm sorry, but $75-$80 is not a bad price for uranium in a normal world. What it's not reflecting is the kind of the absence of and the, what it's of uranium in the market for acquisition. And I think as that lack of access to fuel starts to pinch this out further, we're going to see it. We're going to see it moving more.
Yeah, I guess I'm not really talking about flatline price wise, which is obviously happening. I think that's most people's chagrin for the whole of most of 2024, but more about nuclear's role, for the last 10, 20 years, and even now, it's nuclear currently is 9% of global supply. So that's the bit. Obviously energy demand's going up, so in terms of kilowatt hours, etc., it is increasing. But in terms of as a land grab, as a percentage of total energy
Well, I think
generated is
that's
not there
reflective of
yet.
the amount of time it takes to actually put these things into
Exactly.
play.
Exactly.
You're talking about multiple years. You've got a lot more hurdles to get a nuclear
Yeah.
reactor going than your average bear.
Yeah. No,
Um,
I had a conversation with a fund manager at the weekend, and he was saying, "Well, are we wrong to keep holding uranium? Are we done?" I said, "Absolutely not." And said, "Well, when's the next leg up?" I said, "I absolutely don't know, because whatever information we've been fed by experts in the market, everything's just taking a little bit longer than advertised." And I think that's kind of the slight disappointment of last year for most, and maybe the year before, and maybe the
but
year before
I think
that.
it's just the reality setting in. I think
Yeah,
there was too many people hyping it in a
yeah,
way that made people feel it was going to happen tomorrow.
yeah. I
And
agree with you. I'm glad you
and it's
said that.
not happening tomorrow, but it's happening in a pace that if people had sat down and looked at it comfortably, they would have realized that, okay, well, that's how long it takes.
Reality. Dear
Yeah, I
Lord.
know.
Is
It
there any
sucks.
room for this reality in investing? I'm not so sure. That was sarcasm for the North American audience. That was sarcasm. Um, we enjoy it, and we continue to hold, and we do think there's a next leg up, and we do think that this year will have a big part to play in that one. Contracting is the way forward, though. But look, we're going to talk about a few things today, aren't we? We are going to talk about things that affect the companies that you're investing in, folks. So things like jurisdictional risk is a very important topic, and contains a lot of variables which can affect your risk profile, and there's some things that you can do to mitigate that, and mostly not, unfortunately. And we're also going to talk about different types of investment risk profile and timeline type returns as well. So I think there's a fair bit of content today, which I think is fascinating, interesting. Certainly affects our investing strategies. But first, we're going to start with that jurisdictional component, and we've seen a fair few things go wrong last year in different parts of the world. So why don't you kick us off with your thoughts on that?
Well, it's I guess when I first got into this, there was always you always talk about jurisdictional risk and understanding the jurisdiction you're working in. And I remember when I was working in Mexico, we had a company in Mexico. People would ask, "How is that compared to Canada?" And the reality was, well, all the rules are different, but at least they have rules. Um, there are rules to follow. So Mexico, for all the reasons that you may want to stay away from Mexico, the fact is it is a mature mining jurisdiction. And we've certainly seen things play out in Niger this past year, and how that's affected things. And we talk about Kazakhstan and what can and can't happen over there. We saw the Inca mine shut down a couple of weeks ago. And Cameco is a big player in that. They hold about 40% of it. So this stuff does come, and when it comes, it seems to come swiftly, and affect you rather swiftly. And I think my first real eye opener to all of this was the last go round in uranium. There's a company called Khan Resources, and Jim Doak. I don't know if you know Jim.
That's Khan, Khan, yeah.
Khan. They had a uranium project in Mongolia, and Khan owned, I think, 51%, and Russian interests held the other 49%. And they spent tens of millions of dollars developing that project. And again, it was Jim Doak was an analyst years ago, and was on our board in the early days, and had then gone on to the board of Khan, and that's where we were kind of keeping touch of what was going on there. Nonetheless, at some point when they were getting close to wanting to really turn this thing on, they received a hostile bid from their Russian partner at a price they didn't think was appropriate. They found themselves a white knight. Unfortunately, it was a Chinese white knight. And about a week or two after that, the Mongolian government pulled all their mining licenses, and then the Chinese fell out, walked away. And a few weeks after that, they reissued the mining licenses to the Russians. So it was Yeah, it's these interactions that you don't see coming if you're used to a more a civil sort of approach from your government. If you're in North America or in the Western world, uh, you can't believe some of this stuff can happen, but it did, and they actually wound up taking the Mongolian government to international arbitration and won 300 and some odd $1 million. But I mean, they lost the mine. They lost. This is years later. It was a real rough go. So, yes, something like there's a kick in the head right out of the gate. There.
Yeah, and I don't think that's limited to only Chinese, Russian, etc. I've seen this play out across Africa from all nations, where people of a certain profile, do behave quite strangely, and sometimes on the face of it, looks like the government stepping in, but it's connected people using the government to do that. So I think it's one of those things like when back in banking days, if we saw anything that looked like this, our risk profile was right. We're off. We're out of here. We're not going to give them. They're not going to curry favor with us. So, and we're not going to maybe make excuses for them. It's like we're out of here. It's too much of a stretch, too much of a risk, and that kind of behavior doesn't reflect well on us. And I think that's a kind of regulated environment type thinking, but it's also kind of responsible risk mitigation type policy to have. And I think some people listening to this will go,
Well, yeah. I mean,
I
the
agree.
con example is pretty extreme, but I mean, we've seen softer ones. And there was a company called Stratico that
Oh,
had
yeah.
that was developing a mine in Quebec
Right.
and ran into a lot of community resistance and then government resistance, and they essentially, I don't think it's an official moratorium, but they essentially shut them down again after spending tens of millions of dollars developing a project, and there you go, from hero to zero.
Yeah, starve them out, as it were.
Yeah, and here
It's
we're in Canada, for crying out loud.
I know
This is what we do.
times a killer, and it's kind of interesting. I was speaking to a group who represent First Nations, in terms of being able to negotiate agreements with the owners of the mine or the property, and take a position. He was explaining it to me. I thought it was kind of interesting. I'll be intrigued to actually. We're going to run that again and put that out and sort of hear from the other side of the fence. Um, so we shall see what that looks like. But
Yeah.
we've also seen a lot of social injustice. We've seen a lot of social, I think, overreach as well, because trying to do money grab, as it were. And I was affected by that about, crikey, when was it? About 10 years ago now.
Hmm.
Saw it firsthand on a project we were working at in Lake Okanagan, up that part of the world. So all types of players on both sides, mostly good,
Sure.
but just a few wrong ones really kind of screw things up and kind of.
And the community stuff is important, and you can lump that into
Yeah,
this
sure.
conversation, I guess, as well, because in a lot of cases it occurs because your engagement was too late. It was after you're well into it, and don't think the other side of it isn't waiting to have some leverage
Yeah.
before they sit down to negotiate. But sometimes these conversations have just
Oh
not
yeah, no,
taken
I'm
place.
getting. I'm like saying, I'm gonna. In this case, we'll presume everyone is trying to do the right thing, but occasionally we've been exposed to situations like Africa, where in Africa, where we've done a lot of business, where suddenly people come in and say, "Well, we're being displaced. We need to be compensated." Like, displaced from what? Well, our ancestors lived here. I'm like, what are you talking about? No one's lived. There's a desert. No one's lived. And you kind of look. You try. You've done your work. You've just. And people are trying to insert themselves into kind of get a pound of flesh. Where I'm not sure it's all deserved. I'm just like, sometimes it is, but I'm saying. And my point is talking about the occasions when it's absolutely clearly not the case, and we've seen it down in South America as well, where people kind of just overnight put up a tent village and say, "No, we've been here for 300 years," and you're like, "Whoa, guys, this is ruining it for everyone else who's doing it the right way."
Hmm.
There
Hmm.
we go. I'm going to get into trouble for daring to complain. I'm going to be anti something or labeled anti something here, but I'm in favor with of social. You've got to have the social license. You've got to have the social license.
Yeah,
You can't say
yeah.
anything.
You're not dealing with your neighbor in the UK or Toronto or
Yeah.
whatever. This is you're in different parts of the world, and you're dealing with a very different sort of community who doesn't necessarily have the same objectives and think the same way you do, and
Mostly
you
they
got to be.
do. It's just I'm just calling out the wrong ones here, folks. Just calling out the wrong ones. Right, and then let's kind of stick to because I know you've kind of got a hard stop, and there's quite a bit to kind of cover off here, but quite a bit I'd like to cover off today. Obviously, you mentioned Niger earlier, but we've also got Paladin, Malawi, etc.
That's right. Yeah.
That's a good
Yeah.
example.
Yeah. Well, they put their mine on care and maintenance back in 2014. Same sort of thing. I mean, there are examples of this certainly in the uranium space. There's Rio Tinto. Had to shut down their mine in Namibia for a while. Rosatom. Like there are examples where this stuff can come up and bite you if you're an investor and aren't cognizant of just that risk. I mean, there's these risks are out there, and you have to watch for them. But it can work in the other way as well. I know ISO holds a property in Virginia, in the United States, and it is probably the largest undeveloped uranium mine in the States. It's got about 150 million pounds, but there's a moratorium in Virginia on that property. One has to sit back and watch. And I'm not suggesting everybody jump in because of this project, but you keep an eye on that kind of stuff because the U.S. is now very motivated to develop more domestic sources of uranium. It's not unlikely to see that moratorium lifted at some point in time. So
okay. Well, right now, if I'm listening to this, I'm slightly confused as an investor. How shall I play this? How do you assess jurisdictional risk in that case? Because if you've got instances like Stratico and Con that you talk about, that's hard to call. It's hard to see until maybe it's too late and maybe the damage is done.
mm-hmm.
There's going to be.
It's the same in Australia, right? We've got the same thing going on in Australia.
Yeah. Go on.
All of those pounds are sitting in states that have moratoriums on mining it. Yet there's more and more international pressure now to supply uranium and fuel nuclear power. So who's to say how that's going to go?
Well, I suspect if Labour get voted out, and I expect they will, they've already on a state level. Queensland, for instance, has got rid of Labour government. It could go well, and their energy minister Bowen has just been caught lying to the public about the cost of nuclear energy supply. They put out some information last year, which was blown up in their face. So change of government might facilitate that, because I think the mood from the Aussies is that they are comfortable with nuclear. And the Labour government are not going to be around to do much about it, maybe except in Western Australia. So we shall see where that goes. But those are sorts of things. Like I think even ISO, they offloaded their Aussie assets because they thought it's going to just take too long. There's no certainty about this. We better get focused on other things, North America, etc. So
and then there's other things that I don't think people understood or saw coming was the Paladin fission deal was held up because Canada was concerned about the Chinese influence on all of these assets. Again, there's the politics involved in a lot of this stuff can slow and hold things up indefinitely.
Yeah. Well, so that's because there's a big Chinese ownership of.
Well, fission has a large Chinese ownership. They've got, I think, a 3-year offtake agreement, but Canada was concerned about about the uranium heading to China, and they've put a number of things in place when they gave that agreement to allow that transaction to go through. They had to put a Canadian on the board of Paladin. They had to make assurances that they were not going to be supplying the Chinese with uranium after the offtake agreement expired, etc. So it had nothing to do with Australia or Canada. It was primarily the Chinese influence in that case, or issues that that held up that transaction and could have killed it.
Yeah, interesting. I think I suspected sort of the two guys I suspected at the weekend. One was fund manager, and the other was sort of in the finance space. And I think they both asked the questions about that kind of Paladin Fission deal. Does it make sense? Is it going to work for both of them? And thoughts on what it does for both of them. I mean, I think we've discussed it in the past. I mean, you feel a good merger eventually?
Well, there's a lot of challenges with I think developing the fission asset coming up, and not the least of which is NextGen being right next door, and if NextGen truly has, I think, a head start in terms of a lot of the environmental work, a lot of the licensing, and a lot of the permitting, all of that kind of stuff, and to be trying to do the same thing right next door, I think is going to be a challenge to get the same sort of agreements that are needed, and we'll see how that plays out. I think it's probably fission will probably see more value being held within a bigger international portfolio, but yeah, no, it wasn't. I don't think it was a bad thing by any means for that to happen. Yeah.
Okay.
I mean, there's some other things. Sorry,
I suppose
I was just going to say, we've
my favourite subject, the Fraser Institute.
Oh yeah,
is always oft quoted to me as in when the top 10 region, district, country for whatever the heck it is that they're doing. Obviously, I think it's not much dispute around what Saskatchewan is in relation to a good jurisdiction for uranium. Etc. But there's a few new entrants sort of popping up, like Wyoming, jumping up. There.
Yeah. Well, and I was looking at it in terms of this conversation, and I think they've got 86 countries that they've actually ranked on a number of different ways, but it's primarily from their a good jurisdiction to invest in. Not surprisingly, I guess Niger came in last because for a variety of reasons.
Yeah.
But yeah, you're right. Wyoming was like number 9. There's a lot of the uranium jurisdictions. I mean, obviously, as you mentioned, Saskatchewan and Canada's up near the top. Western Australia's up near the top. But then you're into Arizona, Wyoming, South Africa. And then then you get down, Kazakhstan, Mongolia, getting near the bottom again. But I mean, it's an interesting source of information if you're considering evaluating the jurisdictional risk of your investments, for sure.
Yeah, and I would remind people that different states and different provinces also affect the ability to do business.
I mean, again, I go back even in Canada. I mean, to the extent that British Columbia is a fabulous jurisdiction to be doing mining in. They don't like uranium, so
Yep.
you got to get a little more granular sometimes in what you're looking at. I don't know.
Yeah, for sure. Now, the thing that I'm kind of speeding along because I was conscious. I know you've got to go in about 15 minutes. Maybe we'll have a proper conversation next week. Some of the other things which have been kind of thrown at us over the Christmas period. So, like jurisdictional risk, I think maybe we'll come back into a more detailed component. Maybe look at some of the jurisdictions which we think are working. Obviously, the whole Athabasca Basin component. Enough said, but we'll say some more. Wyoming, I'm really sort of interested in looking at. One of your business partners obviously got some stuff going on down there as well, and you've obviously got you've got the whole Cameco and Orano element with your project or projects, I should say. But what's their take on what happened last year, and how they're going to approach this year, because they've been affected in different ways?
Yeah, well, we're seeing a lot more effort on the exploration side. So I think they're both of them are opening themselves up to making more investment in exploration than they have over the last 5 or 6, 7 years. And again, when things get tight and things get slow, that's usually where mining companies will pull back, is on the exploration to some degree. The Cameco, with the mine in Kazakhstan being shut down, they hold 40% of that. There's question as to whether that was really a permitting problem or or a licensing problem, or whether the Kazakhs are just giving Cameco a poke in the eye. And of course, we've seen Irano's issues in Niger and other places. So, I mean, I think from an exploration standpoint, we're seeing it as being a good thing that they're turning a lot more attention to that and a lot more money. That's certainly going to help us in our projects moving forward.
Joe, weird, as you're talking about it, John Robbins at Arana just emailed me. Just popped up on my screen.
Uh-oh.
Yeah.
Did he mention me?
Well, I think they're talking about their Mongolian project. They just got approval, 79% approval
Oh.
on that. Yeah, so that's...
Yeah, I know John watches this, so hi, John. Yeah.
John, you're the best. He might be our one viewer. Could be that.
That's enough. It's the only one I need right now.
Exactly.
Yeah.
So obviously Arana looking started the year quite well and off and running, and say, exploration high on their agenda as well. So that's good news for you too. Like I say, there's a few things thrown us over the Christmas period, which I thought there was a couple of really, really good ones. One is around this kind of, drill to kill mentality. How does that compare to other sectors like tech? I think tech companies, someone said, well, tech companies seem to be able to kind of like, kill things really, really quickly. What's the difference between the way that the investment in that space, where I know I've got an answer really, really quickly, and mining. So, and we'll come to that one. But the other thing is that people are talking about is, G&A costs, spending by juniors, especially in a period which has been pretty tight for capital. And when things are tight, people look at their budgets a bit more carefully, and they spend a little bit more wisely. Just like your own home budget, if budgets are tight, you look at all those things, that the outgoings, and can you affect inbound money in case you can't, or how do you allocate your spend more reasonably is the way that I kind of think of it. So when we start with the G&A and like Gina,
yeah, I would actually put that one off for a longer conversation, because it is an interesting topic, and I mean there is a standard amount that needs to be set. I mean, we're all public companies that you're investing in, and there is a cost to being a public company in terms of audits and registrations and license and all that kind of stuff, right? So, and it's not a small number at the end of the day, and insurance and things. So there's that. And then a lot of it comes down to, not just promotion, but communication and where that goes. I mean, the fact of the matter is that if people don't know you're out there, they can't invest in you, and they won't. And if they're not investing in you, then you're not, your price per share is going down and on it. Like it's a bit of a cycle. And I think, and that whole world of how do I get my news out has changed a lot in the last 10 to 20 years, like a lot.
Yeah.
So the channels that I can lean on, and what it does come down to in a lot of cases are people just companies shotgunning anything and everything in hopes that it's going to help, and that's not a good way to go either. But I think, and then there's what do you pay these people at the end of the day? So I think that's probably a
okay, leave for another time, because one thing I know is when you kind of ripping through all of the documentation around expenditure, there's still, I think, way too much scope for bundling stuff up, so people and obfuscation of what the companies are actually spending money on.
Yes,
I know from these conferences that people are trotting to around the world that they're going to some really nice restaurants and staying in some really nice hotels, and yes, they are flying business class folks. So,
well, and what are they even there for? In many cases, like what's the objective of that trip?
Don't even get me started. I was talking. I've been talking to a few companies, and they're saying, "Oh well, we'll see you in Cape Town." So there's a mining indaba in Cape Town, which is basically the first week of February. Nice weather, lovely, nice wines and stuff, vineyards, etc. And that's fine for me because I'm spending my money and doing that. When these companies going to schlep into town, they're also doing the same thing, but with your money, folks. And I don't mind if it's going to. Well, I do mind. I mind slightly less if they're there and they're going to genuinely meet money or meet ministers and actually get on with the job of advancing the company. When sometimes, and I've I've heard it firsthand. When they're off to Uganda to look at gorillas in the mist, that pisses me off. If you've got companies which, like in Daba, your project's not in Africa, please explain to me carefully why you are in Africa talking to investment firms that are coming there to invest in Africa. Please give me a good rationale for that one. Same for other conferences around the world.
Yeah.
People are like, it would because, there's no money back home, we've got to go and chase down all the money. Okay, well, okay, maybe, could be, but that's not working, hasn't been working. So I'm not a believer. We've got a lot of people over in Middle East at the moment. I think that's probably a good one. I think there's a week or so of conferences between Dubai, Abu Dhabi, and Saudi Arabia, up in Riyadh. We shall see what people come back with there, but I think there's a lot more money there. But it's very specific types of companies which will be able to get money out of the Middle East. And I worked there as a banker for a few years. I know how it works. So big advanced projects, I believe you should be there. If you're an explorer and going to the Middle East, hoping to get funded for your exploration project back in Canada land, forget it. That's a waste of money, guaranteed. But there we go. This every week I do have these rants, don't I? I've got to stop doing this. I'm a very angry man.
We're gonna put those together into a collage of things, a compilation.
Yeah, things that piss
Matt's
me
best
off.
rants. Yeah.
Right. Okay. Well, then let's go back to the first thing I talked about, which is an inbound which came in from a few people actually talking about, hey, because we've been spending a lot of time, marketing to and advertising to people who invest in the technology space, right? And that's fine. It's a big space. I often quote the line that, if you put all the mining companies together, mining exploration development companies together, it's not even half the size of Apple, 1/3 of the size of Apple. It's not even close, right? So technology people are going, well, I've made a lot of money over here. Why do you keep trying to get me to invest into the mining space? I can see the similarities, but at the same time, I don't understand why I'd be better off. It's a hard one to argue.
It's like rolling a pair of dice that never stop rolling, waiting.
Yeah. But mining is rolling, but because what they're used to is if they invest in an early stage, technology company, that technology company very quickly works out whether it's going to work or not. Within 2 years, they can kill it, and mostly they do at a much higher rate than even mining companies. So that money's lost and gone, guys, because there's no sort of transferable asset into whatever the next co is that management team or individual moves on to, right? So there's transferable skills maybe, but no valuable, verifiable asset that can be, bought. I don't think. I very rarely see it unless it's a bit more hardware-ish. So should we? You worked in both spaces. So the tech. Why don't you describe the startup tech space and then talk about startup mining and see what
I was in the technology end for about 15, 20 years, kind of where I started out. And it was, and I, and when I moved into this space, there was a lot of comparisons. I mean, I was used to dealing with geeks on a computer, and now I was dealing with geeks with rocks. And both seemed to need a lot of upfront. As a startup, they needed a lot of startup money. It wasn't just something you could kind of start up in your garage and then grow it organically over time. You had to spend a lot of time and money building something and doing something with it. And in both cases, you're not generating revenue until you've actually gotten where you're going. So I saw those parallels, but to your point about how quickly you can get in and out, I think the big difference out of the gate is obsolescence. So, the technology that you're dealing with on a day-to-day basis has a shelf life of maybe 6 months. And that's what we always found. Whether it was a new computer, a new piece of software, a new technology, that thing's going to go obsolete unless you can get off the nut and get it and monetize it somehow. In our space, we're dealing with a product that has no shelf life ever. Ever. And it's a little bit more about a hunt than it is about building something. So your hunt, and every year that goes by, you're getting more information that gets you a little closer. It's like looking for the Titanic sometimes, but the technology changes, the understanding changes. We've talked about it before in the basin. We realized that for 10, 20 years, everybody was stopping short because they thought, the uranium was only living at this unconformity and this one depth level. And then all of a sudden we start finding things are much deeper. So all that historic drilling, et cetera, is all of a sudden, it's interesting again. So there's ways to prolong the life of these things that wasn't there before. The other thing is probably that it's the where the money comes from, right? Particularly in Canada, where exploration companies are typically public companies. You get these things up and listed, and that's how you raise your money. I think in technology you don't have that luxury in the same way. I've seen and worked with a couple of technology companies that went public too soon before they actually were generating revenue to support them in any way, shape, or form. And as exciting as it was coming out of the gate because it was technology, the market really wasn't prepared to wait a couple of years for it to become cash flow positive, and so whereas in our case they do, and so that becomes a problem. So your technology companies are being funded in the early days, in the startup days, primarily by venture capital, and as opposed to public money. So and they're certainly going to be a lot quicker to hit the off switch than the public is going to be.
Sometimes. Sometimes. We've all seen charts where say that occasionally that's not the case.
Yeah.
So I guess my challenge with all of these sort of questions from the technology investors is why allocate some of their portfolio into this lovely little mining space that we all love, because the risks are huge, but the room for, let's say, padding it out, extending the spend, longer than it should be, because it's a hard one for me to argue, because I've seen a lot of instances where management teams know very, very quickly that what they've got is a crock of what, and they should move on. But if they admit that or make that obvious and to all, the investors will leave, not give them the chance to actually go and find another asset, or at least work up another asset they may have in their portfolio to a point where that might be something interesting. So they prolong the agony, they prolong the mystery, the myth, the actuality of the situation for longer than they should, and they're being naughty in that instance as a public company.
But I think, and you've pointed this out before. I mean, that comes back to then you have to understand your investment a lot more deeply than, that you're not just rolling dice. You're looking at the management team, you're looking at the property, you're looking at the project, you're understanding what people are saying about it, the risk, etc. The difference on the technology side is the technology half the time is being taken out by another technology, right? They're all running a race to be the one. I mean, we watched when the internet hit the ground running, hundreds and thousands of new companies. And, how many of them survived? 5. At the end of the day, we saw 400 online wedding registries hit the market for first mover advantage one month. I mean, so it's your technology investment is going to be taken out by another technology. If you're looking at early stage stuff, I mean, it's a little easier if you're talking about Apple or NVIDIA or somebody that's now established, and you can see the path they're taking. But if it's early stage technology, now you're really running blind.
Yeah, it's a tough one. But for every rule there's an exception, and it just makes it difficult for investors to make their minds up. So I was trying to discount the extremes at either end of any argument, and that could be the high flyers, or the ones who've folded very, very quickly, and you got to work out what your risk profile looks like.
You really do.
What assessments you're going to make, to make you feel comfortable, so you can sleep at night, that sort of thing. Because I think one of the projects which caused a lot of kind of, I guess, confusion in the market. Some very happy people, but some very confused people going, well, maybe my company could be a bit like, Azure Minerals, the Aussies, who, spent a lot of time hunting silver in South America, didn't find any, came back to Australia, hunting for gold, didn't find any. And it was over a long period of time. And then accidentally found lithium and then got bought out for a vast sum of money. And, went to, a couple of billion Aussie almost within a, 6-month period. It's when people sort of see things like that, they think that their project, every time they think their project could be that thing. They could do that.
Well,
And
that's a lottery ticket then.
yeah,
That's a lottery. But having said that, if you're familiar with the team and you know that they're going to be that resilient and like a dog with a bone, they're determined to find something, then that's what you're betting on.
yeah,
That they're going to find something. But you're talking about high risk investments that you need to understand. You got to be prepared to write off.
back the team. You got to back the team. Now we are unfortunately going to be cut off here for time. I know you've got an important call to make, so I'm going to let you go do that. Let's talk next week and dive into that kind of junior company spending, and let's get into it. Maybe even sort of look at some of the documentation that they need to submit, and we'll
Sure.
we'll, we'll talk about the pros and the cons, and maybe even how to interpret some of it because.
I am an accountant.
Background, so you should be able to explain it all. I look
Yeah.
forward to that.
Sure. We'll take a look at that for sure.
Brilliant. Okay, Chris, as ever, good to see you. We will catch you next week.
Very good.